Good morning, everyone. Welcome to the Speak About Real Estate podcast. And today, I'm your host, Matthew Ma. And on this episode, we're talking about developing a money making mindset and investing in real estate with co founder of 3D Real Estate, Profit in Prairie, Real Estate Investment Group, and multiple ways to wealth and Keep. Thanks for being on the show today.
Thanks so much for having me, Matthew.
Yeah, excited to have you here. At first, we're just talking earlier. You're from Canada. What part of Canada are you in right now?
Central Canada, so right between Alberta and Manitoba on the west.
Nice. How's the weather over there right now?
Right now we're just starting to get some really beautiful spring weather. The snow's all gone, although we've heard we might get more back tomorrow. But yeah, it's pretty nice right now.
Cool. I'm glad to hear that. And then in Canada too, what's going on over there in terms of, we're going to jump in right now, but like what's going on in terms of COVID and how's the market doing in real estate in general?
The market overall in Canada is really, really hot right now. We're still finding some good deals, but definitely not in the major centers. We're going outside and looking in the smaller areas. But our most recent purchases have actually been in the U.S. in Memphis.
Oh, nice. I can't wait to dive in deep into that. And right before we get started with that part of it, how did you get into real estate and what made you start investing into real estate?
My background's as a financial advisor, Matthew, and as always, my income was 100% tied to what was going on in the mutual fund markets. That's what I sold, and so I was just looking for another stream of income. Like my book says, multiple ways to wealth, another stream of income. I love multiple streams of income. So we were looking at just adding one, and we thought, I was hearing actually some of my clients were coming in and taking money out of their portfolio to put it into real estate. And I realized I really didn't understand real estate at all. So when one of my clients kind of educated me a little bit, we signed up for some Robert Kiyosaki courses.
Yeah.
And you know what? The rest was history. Within 2 years, I sold my financial planning practice, couldn't even sell mutual funds anymore once I understood real estate. And we've never looked back.
I'm so glad to hear that too. And yeah, Robert Kiyosaki, I think, he has great videos, he has great books, of course, and just great topics in terms of like, learning and really understanding the financial models of real estate investing. And he really broke it down. Even for me, when I listened to it, watched it, read it all different ways multiple times, it just makes you really think about the difference of financial advising, real estate investing, and different strategies and benefits. It really matters, right? And you mentioned you had a financial practice, and to go from a financial practice to go into real estate investing, not exactly the same, because in my role as a real estate agent, I see sometimes other companies, financial advising is one way, right? Is this way, or else is real estate this way. There's no like exactly true diversification because both people want to help you invest your funds in a different way.
Yes. And you know what? I actually used to advise people against investing in real estate. I said, like, really, now that I realize that it was really dumb stuff, but
Yeah.
why would you invest in an asset class that pays you like 3% a year? And
Yeah.
because I'm only thinking appreciation, I didn't understand all the ways that that you make money in real estate. So, as a financial advisor that sold mutual funds, I was 100% trained on that. I'm
Yeah.
only trained on that. They don't want you to know other stuff. So it wasn't till I started looking at different avenues for myself that I started to realize, wow, I think I can help a lot of people here too.
And I completely agree too. And I know, like, for example, like some life insurance people, they're like, hey, I'm full on life insurance policies. I want to protect you, protect your family. And I totally get that. That's one way. It's not the only way. Financial advising is one way. Real estate investing is one way. But I would say everyone should be fairly open to saying that, hey, for you and your family, you really need to figure out what you want to do, how it works, your risk tolerance, and how you want to grow, and have a financial team together to make the best decisions with you together. It's more fair than saying it's only one way to do business and to invest.
Exactly. Yeah.
So yeah, jumping from financials into real estate, it's, like when you start looking at the real estate model, what were the benefits that you saw right away when you start listening to Robert Kiyosaki and, going on into investing? What did you see?
Well, I was earning 250,000 a year, approximately, sometimes more, sometimes less. But one of the things I liked about the mutual fund industry is I had a residual income coming in every month because once you built up a certain book, you got paid trailer fees, like service fees on your assets. So I really like the idea of recurring income. So when I realized how real estate worked, where you can get that recurring income from your renters, that was a big plus for me. And then mortgage pay down is another really big plus for me. So depreciation, appreciation, forced appreciation, like they're all really amazing ways. But I think my absolute favorite is the mortgage pay down, because no matter what's happening, you're going to pay your mortgage down. We're at a place in our lives, we're over 25,000 a month in mortgage pay down alone. And what Robert Kiyosaki taught us years ago, the definition of wealth and being out of the rat race is somebody else paying for your assets. So, at one time, Matthew, I was a single mom, earning $1,200 a month. And now I can have one tenant paying me $1,200 a month. And we've got 778 doors. So not all of them are at $1,200 a month.
Yeah.
Let's say on average, $800 a month. Wow. Like what a difference from the life I used to lead.
That is a huge difference too. And I love the fact of residual income, passive income streams, and having multiple passive income streams. That's really a great way and a great take on investing. I'm not sure why, even for me, like it challenges getting many people to understand that, hey, you really need to think about life as one life to live. You really need to find ways to create a better life for yourself. And one way for your family to do that is through passive income streams, whatever it may be, right? And the benefit of real passive income stream
And
is
different
time.
ones will perform at different times too, which is so awesome, because if you have everything in one asset class,
Mhm.
then the market's down, stock market, say for example, all your income is down. But they offset each other in a lot of ways, and that's the other part that I really like about it. There's always money coming in from somewhere.
Yeah, because I talk to a lot of investors and clients, and we talk about like active income and passive income. And what I try to help explain is that real true passive income is something you can go. I think Robert Kiyosaki says it best. You should be able to sleep and make money. And what that really means to me is that you're getting time back, time to help and be with your family, time to do anything you want, time to travel. You don't need to actively work and do a full-time job, do any side jobs you want. You're getting passive income streams, and someone else is paying down. One thing you mentioned too is paying down your mortgage. That's a really big component of investing, being
Huge.
able to pay down your mortgage. So, like, what do you mean when you say pay down your mortgage? How do you feel about that? Like, what does it do?
Well, there's a couple of things I really like about it. One is it just happens automatically. The mortgage is paid, the interest and the principal is paid at the same time. The tenants are the ones paying it, and then it's also not in my bank account, so I can't spend it. I love spending money. I like buying things and going places and stuff, and it's just a way to build wealth. Again, where other people are contributing to that wealth, and it's automatic again.
And I think part of that too is like when I have discussions with people, like, well, I can't buy real estate, I can't afford it. I'm like, realistically, you could if you, for example, you had a stable job and you have that risk factor. But let's say at any price point, it doesn't matter where you live. If you can take a look at your incomes, your savings, your partner savings, and use that to buy a property, it doesn't even have to be local property. It can be a international property. It can be another state, for example. But you really need to start looking at how to build a team, how to buy a property that's in your price point, and how to grow it, and using that rental income to pay down the mortgage, right?
Yeah, yeah, and home equity lines of credits are in our market, especially right now, like everything is hot, so there's lots of equity that people have in their homes, and I call that dead equity if you're not actually doing something with it, because it's just sitting there, and you can turn around and leverage that, and do so much more than just having it sit there.
That's true. There is actually a lot of debt equity into it. And even one of our podcast hosts, guests, they're talking about like how to use that debt equity into other forms of income and creating better returns on it.
Mhm.
Even with calculations showing you up front, you can make some good money with that debt equity. I know in some cultures, we actually like to keep the equity there into the property. And the reason being is not the equity itself, it's just for stability, saying that no matter what happens tomorrow, the house is paid for. I don't have to worry about it. The next property, all in, you can use all the equity you want, but the primary property they live in, they keep all the equity. And sometimes like, wow, that's actually $1 million, $2 million, $3 million equity sitting there. You could use just a percentage of it and
Just
still be
small
safe.
amount,
But they're
yeah,
like, no, my mindset is just this. No matter what happens, I'm gone tomorrow. It's still there.
yeah,
I'm like, okay, I get it. But think about it, right?
yeah.
10%, 20% is still a lot of money to use for something else.
I agree with you.
But in terms of paying down in the revenue streams, the next part of it too is, okay, you have a renter, they're helping you pay down your mortgage, and really you might even cash flow right away when you have that pay down. And what happens is you're breaking down the mortgage, and at one point, maybe 20, 25, 30 years from now, you actually own the property free and clear and just pay taxes, but you actually have that positive, greater positive net income. And that
Mhm.
makes a huge difference,
And,
right?
and the other thing we like too, Matthew, is being able to refinance our properties because you could potentially pull out $500,000, $600,000, and because it comes to you in the way of a loan, there's no taxes either, which I love.
That is a good way too. So for example, let's say this, you look at equity growth and your property is growing over time, and then you have more and more equity in there. You actually start refinancing it, cashing out, and using that equity to buy other properties, right? And just keep growing and scaling it.
Yeah,
And one thing too, you guys have already scaled to hundreds of units already.
yeah, yeah.
How did
And
that all
we,
start?
we find it easier and easier all the time. We get better deals, more deals. Like we're always finding deals that other people just never seem to see. And we never set out and end up with this many doors. Our first goal when we started with Kiyosaki was 50. We thought, oh, 50. We didn't care if it was 5, 10 years. 50 was like so far out there. We had 50 doors within 18 months. And that's what
Wow.
really opened my eyes. We were inducted into the Kiyosaki Hall of Fame for using many different strategies that we were taught. But it was when we really started focusing on multifamily that we really started noticing a difference too.
That's true. I love multifamily. That's actually one of my favorite categories to be in. And that's why I started my career in multifamily as a real estate agent and investor. So like, for example, when Robert Kiyosaki talks about it too, how did you guys jump into getting your first property, and what was the challenges to get to your first property?
Well, we actually had really good market in our home city in the last 5 years. So we had our house had almost doubled in value. So we had a bunch of equity that we could use. So we bought our first two properties with that equity. And
Nice.
our number one thing was we were scared of everything because we didn't know anything, Matthew. Right? We were brand new. We'd taken some education, but it was still scary. We were scared of tenants and toilets and roofs and furnaces and all that kind of stuff. So basically, what really got us going is we bought the first couple on our own, but it was fearful. We partnered up with another couple who had taken the same training we did, but about 2 years prior, and they owned like 20 houses, and they really took a lot of our fear away. And I think just because they had confidently done it for 2 years, they were cash flowing their properties, and I still remember them taking me into some of their properties and going, "Oh, these are kind of scary. I wouldn't live here." And you go, you got to get that out of your head. You're not going to live here. You're not a renter. So
Yeah.
those were some of the biggest things for us because being in the industry for 2 years longer than us, they had some experience. They understood the markets. They understood which were the best rental areas to stay in and the ones to stay away from. And that just gave us a real comfort feeling of moving forward and then growing.
That's true. Like once you get into it, and I think the best part is, for example, having a mentor or having a way to get started and really getting out of your comfort zone and having a partner you can trust to get into the doors. And once
Yes.
you start learning it and inside of it, then it becomes a lot more easier to start scaling because you already see the problems from day one, challenges, things you're learning. It's not a challenge directly. Indirectly, it's different, something you're not used to. But once you start learning it and getting comfortable, you start understanding more and you start saying, wow, this is possible. And the income that's coming in, it makes it so much greater. Like you're actually seeing income coming in every month. And you're like, wow, I can do this. And then it becomes all financial. You use your financial background and say, hey, I can actually start scaling this up now. And that makes
Yes. Yeah. Because, when we hit the 50 doors in 18 months, that got us the 5,000 a month that we were hoping for. And that's when we realized that we could now leave what we were doing and go straight into real estate. We just knew we could do better. And a lot of people thought I was absolutely crazy. Really? You're going to leave at 250,000 a year, something you've been doing for 15 years that you like and love and all that kind of stuff. Great clients and move on. But we said, yeah, we just seen that it was a great place to be. I also like the safety factor of multi-residential buildings. I like the way that the financing worked for multis. And I had a lot of people that were interested in investing in real estate where when my blinders were on, never even thought of it.
A lot of people talk about like, buying multiple single family homes. I'm like, that's not actually for me is not the best way because for example, I love multi-family homes because one roof, one foundation, one of each or
Yes.
maybe two. But at the same time, it's just so much easier because you're per location. And as you start scaling the building to bigger buildings, it just gets simpler to manage, right? You're not driving to 10 different houses. You're driving to one property, one location, managing one of everything.
Yeah.
And it's faster that way. And the cost has just become so much easier to absorb, right?
Yeah, and the other thing I like too is it's almost mandatory that you have professional property managers. One of the things I learned, Matthew, when we got to 50 doors and we would go back to conferences and stuff, and people would say to us, oh, "How'd you grow so fast? Like I've been doing this for 3 years and I haven't even bought my first house," and different stuff like that. And we compared ourselves to what they were doing, and what I found is most people who had actually bought. So they got stuck at the 3, 4 door area. And the reason why is because they chose to do all the property management themselves, all the tenants and toilet issues. And that got them stuck. Like 3, 4 years later, they were stuck on these 4 doors. And they couldn't even imagine 50 because they were so busy working in the day-to-day crap of things. One other thing that we did really well right from the start, because both my husband and I were making good money doing what we were doing, it made no sense for us to property manage or deal with tenants and toilets, any of that, any maintenance stuff. And I think that also what allowed us to scale because we weren't drawn into that day-to-day drama of dealing with all that stuff. We always left that to our partners were actually property managers. We left that to them and we were always the visionary. Okay, let's do this, let's do this, let's do this. And that's what allowed us to scale.
I completely agree with you too. As a real estate agent investor, and I actually manage properties too, not by choice, but for example, I do it to help my investors actually grow their portfolio, and then I help them
Okay.
resell it and 1031 exchange it to grow higher and higher.
Yeah.
But then
Okay.
to be better, it's actually is better to have a really good property manager. And I think the key trade-off is this: understanding that the property manager is not expense, direct expense. It's actually investment. If you find the
It
right
is.
property manager and
Yes.
using that property manager, they have the access to all the vendors, they have access to all the contacts, they know pricing, they know values, but you have to be careful with who you choose because some of them will overcharge you on every single line item. If you look
Yes.
at my company management, we actually don't do that. We actually keep it really low, cost effective, manage it, but we actually, our focus is to increase the value of the property
Yeah.
to make them be able to sell it and exchange it for a better property.
Yes,
So that's
yes,
different.
that
So
totally makes sense. We've had property managers use our building as an ATM, or we felt like it. Like every
yeah,
time they walked in the door, it cost us money, and it was like, and even though we have property managers, you are still responsible, so you have to be on top of the property managers too.
yep. And I think the trick is this: understanding this that each person has a different goal, right? Of course, and that's their business. But at the same time, you can look at the contracts, you can start to understand it, compare the contracts, see how
Yes,
they charge, look at past examples too. Are they nickel and diming you everything they're doing? Maybe. I hope not. And the ones who actively work with you, knowing the fact that you're growing your portfolio, they want to be there when you're growing your portfolio up. If they're bad
yeah,
at one
the
property, they're
smart
not going
one.
to take care of the properties, right?
Exactly. Yeah,
It's a team effort.
exactly.
So
Yeah,
find the team, right, to make the effort, and it'll work.
yeah,
And then
totally agree.
getting your time back is the important part too. Like you said, emotions tied into like being busy. You're managing all this active day to day. That's not the reason you became an investor to manage toilets. To fix these things. It's really to
Mhm.
build the financial and build the visionary part of growing the portfolio.
Yeah, it absolutely is. And you can get drawn into it easily. And I know it's happened to us before where we've got drawn into it. Oh, we might have not been happy with our property managers. So now we start, overseeing them a lot closer. You should just get rid of them and get a new one that you can trust. So we have got drawn into the drama before and it's caused us to slow our growth at those particular times too.
I think the challenge is because, oh, I can do it better. Of course, you can do it better, but that's not the point. The point is you really need to learn how to delegate and become a leader. That's the challenge, really.
Absolutely.
So
Yeah,
that's
for
always hard for
sure.
everyone to become a leader and to delegate everything out, to trust and earn trust, right? You
Yeah.
give it up front first, but they have to keep earning it every day to maintain it.
Yes.
So
Totally
that's the
true.
challenge I see a lot of people happen.
Yeah.
So when you're buying these real estate properties and building up, what were some of the first mistakes that happened throughout investing, and like how did you overcome those?
Well, even buying our original condos, they were older buildings, so the condo fees went up extremely high. We still own them, but they're just kind of in a break-even position because the condo fees are so high. But we're also at a position where we can't get any single-family mortgages anymore, so there's no point giving them up. We're at least getting mortgage pay down, all that kind of stuff. Stuff like that. Just not thinking properly, not being around the right people. We've bought buildings that were both BRR strategy and turnkey, and we like them both. We've had different success with both strategies, so we like all of that. We're not tied to any specific area. We just want cash flowing properties. That's one of our main things. They got to be cash flowing.
Cash is king, right?
Yeah.
That is very true. And some people will tell you, I love it too. I love the cash plus the equity. Okay, let's do that.
Oh, yes.
Those are the fun ones.
Especially the forced equity, right?
Yep, forced equity.
Like the ones that we just bought in Memphis, we paid $21,600 a door. Well, you can't even come close to building at that. We'll put another maybe 15, 16 a door in, but then they'll be worth 55 to 60 a door, just as is, just basic workforce housing. And that's huge. And like I said, you can't even build them for that right now. So those are the things to be wary of too.
That's very true. I see some of that. I'm like, the house is so cheap. Like, I can't even build a bathroom in San Francisco for that price of the house.
I know.
It doesn't even make sense. But okay, if I can buy that and then do some forced appreciation on it and get a good renter in it, and then it helps, right?
Yeah.
But then I guess some people's mindset will be like this too. Well, if the house is that cheap, how am I going to get a renter who's going to pay and take care of the house once I remodel everything anyways?
Yeah.
You have to work hard and learn and earn and make it happen, right? And find out how to make it happen. That's how you create appreciation and value.
Yeah, totally. And, I think the other benefit right now, too, with all the trillions of dollars being printed by the government, I think, and always, real estate's always been a real estate hedge, inflation hedge, but we're going to see a lot more of that going forward, too.
Can you speak upon that? Like, how does inflation work? How does betting on real estate during this time period and with excess cash coming in right now, how does that change the market?
Well, it's inflation has always been something that eats away at the value of people's money. So to be able to keep your assets up with inflation is a huge key on building your wealth. People who say invest in a term deposit, GIC type investment, they might get, 2%, but half of it goes to taxes immediately. And then, inflation is more than 1% a year. So you're actually going backwards every year. And people don't think of that. If you take into consideration the low interest rates we have right now, and I'm not sure what you guys are paying in the US, but we're getting some of our apartment buildings at 1.5%, 2% interest rates. Yeah.
I wish.
I know when you take inflation into account with that, Matthew, we're actually getting paid to hold a mortgage. Isn't that crazy?
That's very crazy.
Yeah.
I think more people need to really understand how inflation works. What does it mean? What's the simplest way to describe it? And I think one way is this. If you leave your money in a bank, you're actually losing money every day, just leaving it there, not doing anything with it. You really need to use it and put it to use to make money, not just spend it, of course, to make money, right?
Yes.
And people are like, what do you mean I'm losing money? It's $1. I'm like, no, it's not. You're actually losing a lot if you look at inflation, right?
Yeah.
Per year over the last 5 years, 10 years.
Take that into consideration. It's just not a thought process. But, even as a financial advisor, we always had to put that when we were running our numbers because inflation it eats away.
I don't think if you look at a lot of financial models, not financial advisors, but just financial models in general, you know how online is so simplistic. They never talk about inflation. Not all of them talk about inflation and hedging your bets and growing, right? They just talk about here's the exact dollar for dollar calculation today, only today.
Exactly. It makes you look like you have a fortune, right?
Yeah.
When the real time comes along, it's actually worth half of what it looks like.
Yeah, and then they're like, what happened? I'm like, well, did you think about inflation? Did you think about taxation? They're like, no, it wasn't in the calculator. I'm like, well, that's not how it works exactly, So that's the scary part of things too. And I think one thing too, back in high school and college and education wise in the US for us, I don't really see too much of it where they talk about real life scenarios, the real life investing in financials, and understanding the real life part of it.
No. No,
Yeah.
that's so true. You know, people ask me sometimes, I know, what's your favorite book? Well, my favorite book that Robert Kiyosaki wrote is Why Do A Students Work for C Students and B Students Work for the Government? And the reason I love it so much is I was a C student. But you know what? All through school, I was looked down upon for being an average student, right? But now out in the real world, I've realized that that is a huge strength to have. And now why we employ those A students, right?
Mhm.
Because we just have a way of thinking that allows us to move forward, take risks, understand a multitude of things without having to dive really deep to try to learn every nuance of everything. And that's a real strength. And you're not given any credence for that throughout school.
You're absolutely right. I think even like Elon Musk talks about that too, how he actually looks for people who have done everything out there, not just educated themselves to the best. And I completely understand that. But at the same time, the people who have experienced everything and understand it and know how to take that to the next level, those are
Yes.
the ones they really want.
Yeah. Or at least open to studying something and learning something new, not get that fixed mindset that this is the way it's always been done. You know? But yeah, let's see what we can, what else we can do. One of the sayings I have on my desk is, how can we look at this differently? Just as a reminder, you know, even when deals come across my desk, I always tell my students, you know, um, you don't always find a deal, but sometimes you create that deal. And that's the part that really makes you a lot of money is if you can get creative and actually make it a really good deal.
That's a really good point. I was hearing about that too, and we're talking about it too. What do you mean create your own deals? Is that possible? Is that can't you just I just whatever they said the list price, and I'm just gonna buy it or not, right? What do you
Yeah.
mean create your own deal?
Well, you know, sometimes, and this is just this is just one way that has worked for us. But for example, we use a lot of joint venture partners and syndication capital for our deals. And when we initially analyze a deal, because we got to send it out to our investors very quickly, so we go with the basic numbers. 25% down, 25-year amortization, you know, certain amount interest rate, da da da. What does it look like? So that's what we send out to the potential investors. And this one particular deal I'm thinking of, we were looking for 900,000 to be able to close on this deal. Well, as we're going through our due diligence process and connecting with the vendor and stuff, we ended up getting 85% financing from the lender, not 75. So that's a big amount less that we need for capital from investors. Then we got vendor financing for another 10%. We really only had to put 5% in that deal. Well,
Nice.
that is a creative deal. So in the long run, our investors ended up owning 10% of the deal and we own 90. But it was all because of what we did to make that happen. And just really needed very little capital to close on a deal. I've had students close on deals with 2% of their own money in closing costs.
That's really good.
Yeah.
And I think, yeah, the key word is creativity, finding ways to help each other reach the goal and finding ways to create solutions to do that, right? And it's all about asking, figuring out the goals for everyone to make it work, and then putting the deal together creatively and finding ways and solutions to do that, whether it's just direct loan, creative loans, seller carryback loans, other options. There's so many ways, but you don't know unless you ask or figure it out and try.
Yeah.
And it doesn't hurt to try because sometimes you can actually do it and you like unexpectedly, wow, that's actually a really good deal now put together in a different way.
Yeah, exactly. And you know, another thing that I teach my students is, you know, a lot of people they're in learning mode. I'm learning, I'm learning, I'm learning, I'm learning. I go to this course and that course and read this book and talk to this person. And I know I always tell them, you probably know more than I do. They fail to take action. And I tell people, you know, you can study till the cows come home, but it's not till you actually own a building that you're really going to realize that, yeah, I know what I'm doing, you know? And so you got to take action, move forward with faith and just know that, you know, the biggest wealth has been built in real estate. Why not you? You know?
That's very true. And if you look at even financial institutions and just real estate in general, a lot of the biggest investors, institutional investors, all invest in real estate. So why aren't
Exactly.
other normal people like us investing in real estate
Yeah.
more so, right?
Yeah.
And I think there's the fear, or else you could see this. Not everyone wants to teach you that because they don't want you to do it, right? They want to keep it for themselves. But
Yeah.
realistically,
Fair
there's a lot
enough.
of people out here like you, Edna, and us providing a lot of value to show people that anyone can do it at whatever age you are and wherever it needs to be, right?
Yeah. Yeah. Absolutely.
Why is it so hard for people to get to the first property, to buy the first property? Why is it?
Well, you know, I remember when we bought our first property, Matthew, and
Mm.
it's the fear of the unknown. You're doing something different. And, you know, everybody wants to tell you the horror stories of everything that they ever heard that went wrong. And you
Yeah.
start, when you're going to buy something, it's like, oh, I heard about this time when this tenant trashed this place. And I heard about this and I heard about that. And you can't kick your tenants out. You know, all these horror stories come up. And I think that that scares most people.
I think so too. And one thing I think of too is like you really got to get rid of the naysayers. Just because they say no, it can't work, it won't work, you're gonna lose, you're gonna get hurt. It doesn't always ring true and make sense because they
Yeah.
it might not be for them. But if you knew in the general population, there's so many people investing in real estate, you know it works. Otherwise, they would all not be doing it, right?
Yeah, and you know what I tell the students too is when you're wanting to do something, whatever it happens to be, take your lessons from somebody who's done it. Like, are you going to go to a fat fitness trainer? No. Are you going to go to your uncle who's on welfare and say, honey, should I buy real estate? No. You know, like you have to think about that. If they've never done it before, of course they're going to tell you no because they're trying to protect you. They're fearful for you. Don't listen to those people. If you want to do something different, go to people who've had success doing that.
Exactly. You know, you surround yourself with the best and you'll become one of them really easily, right? And
Exactly. You're the average of the you're the
5 people around
average
you.
net worth of the people that you hang around with, and so many people don't want to wrap their head around that because these have been my friends since high school. Yeah, okay, well, you make your choices.
Yeah, I think a lot of people get stuck on autopilot. Like real life, they're
As you
getting
do.
stuck on autopilot. Like, family, kids, whatever. You're working, you're just autopilot your whole life, and later you look back like, what happened, right?
Yeah,
If you're really ambitious and you're goal driven, you want to get things done, you want to change your life, then you really have to move forward and like start working and researching, doing and executing upon what you want, and finding people around you who will do it too, who have done it,
absolutely.
right?
Yeah, yeah.
And
Being
that's a
around
challenge.
like-minded people really helps a lot. Like-minded people that are doing what you want to do, whatever it is, fitness, eating right. You know, you feel it. You be around people who wouldn't think. Twice about drinking a 40 on the weekend. Well, guess what? You're probably going to do the same.
Exactly. Like if you hang out with a guy who drinks 40s all day versus a guy who's working out all day and has a six pack, you're probably going to become like that if you hang around them all
Exactly.
day.
Yeah, yeah.
It's that motivation, the mental energy you need, and it's the mindset shift to make
It
it
is the
really happen, right?
mindset shift. Yeah, yeah.
So, in your education organization, you guys have a company called Multiple Ways to Wealth. What do you guys do, and what do you guys offer to members, and how does that really help?
Well, you know what? I find that a lot of people, and it's probably because, as you said earlier, it's what most people do, so that's what it's trained on. And even when we started, we were trained on how to buy a single family home, how to buy, maybe a duplex or fourplex at the top end. Um, Focusing on multifamily has really opened our eyes. First of all, after so many mortgages, you're cut off usually. So generally, I work with students who already have bought a few properties and they want to scale, but they already are seeing their limitations. I can't get any more mortgages. I ran out of my own money, different stuff like that. So that's where we've really been able to help people, show them how they can use investor capital and why investors want to invest with them, and the ability to get mortgages in multifamily is a whole different ballgame from single family, because single families they look at you as what's your income. Can you afford to pay for this if the tenants move out? With the multifamily, it's treated like a business. Do the income cover the expenses and the mortgage? And so right away they're taking the focus off of you as the only person to be making the payments on this. They take into account that the tenants pay the mortgage, all that kind of stuff. So that's the biggest thing is you don't have to start with single family homes. Most people do. I like to deal with people who've had, maybe a little bit of experience, because I don't want to teach the whole, why is real estate great? I want people to already know it is, and then I can help them scale, because that's kind of been our specialty. What we've been able to do over the years, we can show people how to do, what parts they need to learn so that they can do the same thing.
That makes a lot of sense. It's like, for example, training a new person to do anything versus training someone who already has done it but needs help accelerating their real estate portfolio. Then you step in to help them accelerate it
Yeah.
and really learn. And I think the key thing here too is qualifications. So qualifications means, for example, you're buying 1 to 4 units, you're going to have a limitation. Most likely, most banks are like 5, 10, maybe 15. If you're lucky, you find the right diversified portfolio who give you 15. But
Yeah.
after that, you're kind of getting stuck in qualifications. So you really need to look into commercial real estate, multifamilies, and learning how to use that because that's totally separate and it's not tied personally back to you. So you can start scaling like crazy as long as you can qualify, right?
Yeah.
And the
Well,
building
still remember
qualifies.
one of my students, Matthew, he was telling his sister, hey, we're going to be taking possession of a 32 unit. And she says, oh, I don't know how you can sleep
Yeah.
at night. 32 units. That's a heck of a mortgage to be paying by yourself. And he says, that's the key. I don't pay it by myself. I have 32 tenants paying that mortgage. My multifamily with 32 units is less risky than you and your husband paying for a house. There's two people in your house paying that mortgage.
Mhm.
What if something happens to one of you? You're probably going to lose your house. I have 30. If two people left my building, I wouldn't even notice.
Yep, exactly. And I don't know why. Like I tell people about that too. Like, well, wait, it's my house. I have a job. I'll be fine. Like, no, if you have issues and you can't pay the rent, that's 100% vacancy. It's 100% issues liability to you. When you have
Exactly.
32 units, or just say 10 units, that's only 10%. 30 units is like 3%, right?
Yeah. Yeah.
And they're like, wait, but you have more risk. I'm like, how? I only have 32 two tenants. So two people is 6%, for example, versus you have 100%. Two unit, you have 50%. They're like, no. I'm like,
They're just not willing to listen, right?
yeah. They're like,
To open their minds to that.
yeah. I'm like, okay, but if you just show mathematically, it's math. Math is true fact.
Yeah.
So true facts, take a percentage, take a calculation of variance of how much vacancy, even 10, 25%, it's
Yeah.
still less risky.
Yeah. Yeah.
But that
Absolutely.
So that's a challenge to educate them and show them different. But people might think you're selling them. But realistically, when they see the big picture, when they start investing and when they open their mind to investing, they're like, okay, actually, this does make way more sense. Why didn't someone teach us before? Well, we all tried to, but you weren't there yet. So
Lots of
it's
times.
okay. That's okay.
Yeah.
We'll wait. No
Yeah.
worries.
When you're ready.
When you're ready, we're here
When
to
you're
help.
ready, the teacher will appear.
Exactly. So, that's like always frustrating and challenging because our goal is always to provide so much massive value, help so many people, and really want to help our family and friends invest and really build massive wealth and passive income. I've been doing passive income for 14 years already, and
Yeah.
it's been amazing, right?
We're almost the exact same time in then, Matthew, because in
Mm,
June, it'll be
nice.
14 years since we took our first training, and September, 14 years ago that we bought our first property.
Congrats. That's a
Yeah.
lot, right?
Yeah.
It wasn't easy. It took a lot of work, but you were courageous enough to do it. And you see what happens 14 years later, how much you've done. I don't think most people can imagine that.
They can't, we couldn't when we
Yeah.
started. Like I said, our goal was 50 and we didn't care 5, 10 years. It was like that number was so far out there for us, we couldn't see any higher.
You just have to focus on the first one and then go to the second one, third one. But I
Yeah.
think too many people get stuck in their day-to-day jobs and they're always helping people. Like, great, I love helping people, but you
Yeah.
still need to help your own family. You still need to focus on yourself and invest for your family and create generational wealth and have
Yes.
wealth preservation. I don't think many people understand what wealth preservation really means.
No, no, I don't either. And another analogy I give to people all the time too is you have to help yourself first because it's like on an airplane. If those masks drop down and you start running around putting masks on everybody and you fall dead, how
Mhm.
good are you to anybody? You got to put your own mask on first. So even when you're doing creative deals, you get to create them however suits you. You know.
Also, another thing too is that's a perfectly great example. Another thing too is like lead by example. So if you want to be an investor, you want to invest, you want to help people invest, how many doors are you doing? How much have you invested? And how are you growing in? What challenges are you facing directly first in the front line? Like I love being in the front line. I'll take all the shots I need to take and I'll fail all day. It doesn't matter because I'm learning every single moment. It's
Yes.
okay,
Yeah. Yeah.
but it's
Yeah.
hard. That mental mindset's hard to take, People don't want
Yeah.
to be in front of everything.
Yeah, yeah, and they don't realize too that the world is designed. The universe is designed to give you what you want. You just have to focus on what it is that you want. It's like the law of gravity. If you focus on what you want, you've got to get it. You know?
Yeah. Law of attraction, law of gravity, exactly.
Exactly,
You
same
really need
thing.
to focus on it. I'm sure people look at like, hey, look at Elon Musk. You know he failed every day, but look at him. He's building everything around the world and doing everything that mankind cannot do or believe they can do. He's doing all of them, right? At the same time. I don't even know how he does it.
I know, I know.
Like, how
You
are you
know,
doing so many
we're
different things?
capable of so much more than we can imagine ourselves doing, right?
Exactly. So like what's stopping us, stopping people from doing it? It really is, and I hate to say it all the time, that it really is our just own personal beliefs, our mindset, our negativity around us that surrounds us and changes who we are. And really we should really get rid of that to focus on what you really want yourself, you know?
Yeah, absolutely. Those limiting beliefs. I tell people, some of these limiting beliefs that you have were planted into your subconscious mind before you were 4 years old, and you're
Mhm.
still living them. Like,
Yep.
you can let that go. You can make those conscious changes, but you can't make those changes until you're actually aware of, some of those things that were planted in your brain many, many years ago.
Yeah, I actually see that too. You actually think about like people who eat healthy, work out and everything. You can see like there's a cloud lifted, but at the same time, you can tell from your parents and everyone else they put all these things in your when they when you're raised, you got all these positive and negative things. So I actually, for me, I have two little kids, but I actually try to be self-aware of what I'm saying to them, and I try to not say no. I try to say how, why, what can you do to make it better, and how can you have different opinions, have better open ideas. You know?
Yeah, yeah, me too with the kids. And
Mhm.
and I see, by them having us in their lives, they're more open to stuff than we were. I was
Yeah.
scared to travel and everything when I was younger because we were kind of led to believe that there's bad people out there, you
There
know?
there are, but, as a parent, there are a lot of bad people out there, but you can handle it, you can be aware, right, and try to
Yeah,
watch your surroundings and understand what the intentions might be,
listen to your
but
intuition and your
ex
gut, that sort of
exactly.
thing. Yeah.
Just like real estate, gotta listen to your intuition too and gut, and then sometimes don't believe it because it's not true.
Exactly, too. You got to know the difference, right?
You gotta tell the difference, really understand that that fear might be only for 10 seconds, 30 seconds, 2 minutes. Like, if you're drowning in cold water, it's not because you're actually drowning, it's because the cold water shock is shocking you, right? But if you can get
Yeah,
over that shock within that 2-minute period, then your mind will be back to normal, and then you
yeah,
just take the action, right?
yeah.
But
Take
it's
that.
that fear that's
Yeah.
hard to do it. So,
It
like,
is.
in your organization, Multiple Ways to Wealth, how have you have any good examples of how you help people accelerate their real estate portfolios and what challenges they went through and how you guys helped them overcome it, and how have they hopefully getting to financial freedom?
You know what I do, Matthew? And one of the first things I'm actually doing a workshop on it tomorrow is getting your offer accepted. There's so many people, and as a realtor, you'll realize this. They want to analyze the deal and they want to find investors and they want to know everything. They want to dive deep before they ever even make that offer. Well, if it's a decent deal, it's going to be gone. So one of the first things I get my students to do is just make an offer. I don't care if it looks decent, not, you can always create it to be decent. But here's a live example of a student I was just working with. He went in, and this is a hot market we're talking about, 150,000 more than asking. And the person who got the offer went in at 300,000 more than asking. But you know what? The final price was less than what my client offered. So the key, first of all, was to get the building under contract. You're negotiating from then till the day you take possession. And lots of people don't wrap their head around that. And they think that they, like a house, they have to make their decision and buy it within a week or two. No, you got 90 days to do your due diligence, and you have to take that time, and your original offer price really doesn't matter.
Yeah, like in commercial real estate, multifamilies especially, you have time to negotiate, and people use a lot of letter of intents. They write it wherever. Some people write sight unseen. They just put all these letters out there, and if someone accepts it, then they start doing the due diligence from that day forward and really figuring out the nuts and bolts. Because no matter what, you can't really see and understand the full picture until you actually get into contract and look at the full disclosure package, the full P&Ls, the property itself, and even sellers might not understand the building themselves because it's just so big,
Yeah.
right? You don't
Yeah,
really know,
exactly. Yeah,
and then
exactly.
that means there's room to negotiate between it.
Yeah.
But some people say, "Oh, I'm just stuck here. I overpaid, and I don't want anymore. I cancel out."
Yeah.
Well, did you try negotiating? No, I didn't bother asking. Well, why not?
I know. And then that's when vendor financing comes in to help sweeten
Mhm.
the deal. And I've had students get vendor financing at 0% interest for the first 6 months, all kinds of stuff. And a lot of people just, they just don't even think that's possible. So like you said, they don't even try, right?
Mhm. Yeah, you have to ask and figure out and talk to your vendors and your team and others in the advisory role to understand like, hey, what's the big picture? How do we make it work? There's some issues that popped up. Seller might not be aware. They might be open to negotiating it too, because now they found out there's some issues like sewers, whatever, right? That's a
Yeah,
big one.
yeah,
Maintenance, and if you 260 units, for example, to 100 units, I'm sure most sellers have not seen every single unit in a 100 unit building.
exactly. Yeah, exactly.
It's all perfect. Every unit's perfect. There's nothing
Or
wrong.
we're going to show you the three that are perfect and make you think that the rest are the same.
Exactly. What happened to the other 50 here? That looks like,
Like they're pretty beat up.
yeah, exactly. And that's due diligence. So really, really good due diligence is going through every single unit in the whole building, staying there for a week, a month, whatever you need to make sure you're doing everything you can for your investor.
Yeah, yeah,
That's hard
exactly.
though. It's not easy. It's not easy, but it's not easy making really good money, right?
It's not. And that's where the work comes in. And you got to be prepared to do the work. I have people every once in a while that'll sign up for my course, never show up. And I had one guy one time, he said to me about 3 months later, he says, well, frankly, I thought I would own a building by now. And I said, really? By osmosis? You haven't even done your homework assignments. Like, hello? Oh, but I listened. I said, yeah, well, that doesn't help. You need to actually, one of the homework assignments is build your team. You have to start building your team. If you don't do that, even if you find the best deal on earth, you got nobody to help you close on it. So you're dead in the water.
That's so true. Like, and people, get inundated with being busy, and they don't like they have a goal, but they don't execute on it. I think the hardest part is execution, like taking that step by step. If you guys are breaking everything down for them and they're still not doing it, then it's tough. But I understand too, as coaches and mentors, we can only do so much. And we know the 80-20 rule too,
Yeah.
that 20% of our students are going to take and do it and take action. And out of those 20, maybe only 5% actually do it really well. And the other ones are trying, but the other 80 are not doing anything
Yeah.
even though
And,
they
and
intent
you know,
is.
some people, their goal is just own one building and then they're
Yeah,
kind of set.
yeah.
Other people, they want to own like 100 buildings. So everybody has different goals.
That's very true too. And as coaches, we understand what you want to help you and just try to help you hit your goal. And as much as we can try to pushing them and helping them, guiding them, they don't always receive and accept and are open to the fear and the change, right?
Yes, absolutely.
That is the tough part. But I think, as a teacher too, I'm sure you're having a lot of fun.
Oh, I love it. People say, well, why do you do this? You got all this real estate. Do you really need to work? No, but what the heck else would I do with my time? And I said, I can't buy every building out there, but I can help people buy a lot of buildings. And I live vicariously through my students as well, because it's exciting for me to help them, get that property under contract and negotiate all this stuff and make sure that the numbers are going to work and that they're able to get it financed and da 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 da. But I don't need to own it afterwards.
Exactly. Like, I think from our mindsets, we really want to share and help people and guide them. And I don't need to be, for example, I don't need to be a person who owns all the money or own the properties. That doesn't matter. But if I can help 100 people, 1,000 people, or even one person do it, then you really feel more accomplished, right? And by giving back, in your future that you're going to be so successful regardless because you have all these people you helped in life.
Well, and we know what help we've got from coaches and mentors over the years. We couldn't be where we are today without. I've had a coach since 1999. I got my first one when I was a financial advisor. I have never been without one since. Sometimes I'm working with two or three.
But you need that too. Even as a coach, all coaches need a coach too, because you're only looking out for example, you're looking out for your students, but who's looking out for you? You need other
Exactly.
people as well
Yeah,
to look
we
out
all
for
have
you.
our blind spots, right, Matthew?
Exactly.
Yeah,
For example, you need a health coach, you need a fitness coach, you need a real estate coach, you need a financial coach, you need one of everything, right? Just to
yeah,
really build it out. And by doing that, accountability coach too, especially that's the number one thing you need, accountability, because otherwise days are gone every single day. It's already 5 o'clock now, you're gone, right?
yeah, yeah, exactly.
That is the change too. So like in coaching, are you guys like what's the main emphasis when you're helping people scale? Is it mindset? Is it really building the team out? What
I
is it
would
to help
say
them?
that 90-95% is mindset, because that's the part that I find people really holds them back, is they get in their mind. And some of this, Matthew, could be a limiting belief, like I said, before they're 4 years old. It's paradigms they don't even know they have. And it might be, they might be telling themselves every day, I can't find a deal. I can't find a deal. I can't find investors. I can't find investors. And it's like, if you keep telling yourself that, guess what? That's exactly it. You got to tell yourself, the best deals come to me. The easiest investors come to me. I find money whenever I need it. That's a really good start, because people, I don't even realize how important it is what you say when you talk to yourself. And you can have all the coaches in the world, but if you're not listening to them and being coachable and following what they tell you to do, you're still not going to get anywhere.
I think that's very true. And I think one thing is, you see a lot of really successful coaches and leaders, they have a lot of affirmations, and they really hone in on that, because that really changes your mindset. And once you believe it, you envision it, you can do it. And people say that, no, that's BS, right? No, it really does work if you actually do it, right?
Yeah.
And
If you're not using auto suggestion in your life, you're literally robbing yourself of money coming into your pocket every day. And lots of people don't realize that. And it's got to be every day too. It's not just sporadic. I've had lots of success over my life, but I've had times too where I plateaued, and I realized it's because I'm not doing what I always did to get me here. So
yeah.
what do I have to do again? New level, new devil, or what new do I have to do to make it to the next level?
That's the exact point. And you talk about levels too. Like in our real estate investing and coaching, we help our agents like really understand, like think of it as like gamification in a way, right? Like you really, our goal is to help you level up. And what we mean that by that is really build a strong foundation and really help you learn one thing at a time. I'm not going to put you level 99, because you're not going to get there that quickly. You have to really
No.
focus on these things, get rid of all the holes in it, and understand and educate yourself and train, and keep going up level by level. But people who actually do it, they're getting to unbelievable heights because they just understand focus and execution.
Yeah, absolutely.
That's the toughest challenge for anyone too.
Yeah.
What books or seminars or things that you've went to or heard of kind of helped you with the greatest impact in your business and into your coaching business?
Well, I mentioned earlier one of my favorite books is that one by Robert Kiyosaki. Why do
Yeah.
A students work for C students and B students work for the government? But many. I've studied law of attraction and mindset for many, many years as well, just to continually improve my own. And then, of course, I started finding that was some of the most important parts about real estate is just growing yourself as a person too. Ask and it is given. I love that book so much. I got a tattoo on my arm. I don't know
Oh,
if you can see
nice.
it, but ask and it is given, because a lot of people don't understand how the universe works, and that it's designed to give you whatever you want if you focus on it. And that's another thing that people need to realize. Move forward in faith that things have a way of working out for you. So books along those lines have made a big difference. Think and Grow Rich, absolutely
Yep.
love that book. And our initial training with Robert Kiyosaki Group was awesome. We didn't know when we started that we were going to end up in multifamily. It was just one of the things we were taught, and it took us a few years. Actually, that was the building we bought going into 18 months that pushed us over the 50 was a 24 unit. But that was, the first year we were just kind of trying to figure that out. And once we figured it out, we just stayed in the multifamily arena. And that's really what's been able to allow us to scale. So people need to know a general overview, but I also think they have to end up in a specialty, because if you generalize and do 150 things, you can't really be good at any one of those 150 things.
Very true, and that's a great point too. Like you mentioned, like multifamily, for example, versus single family versus commercial office buildings, storage units, senior housing. Like, what attracted you to the multifamily part of it, and like how does that work with also choosing to joint venture some of the deals with other partners?
Well, for us, it was the scalability. We noticed that right away. Like I said, and we used joint venture partners for houses too. That's how we got to, I think, our first 26 stores or whatever was not just ourselves, but joint venture partners. And I was sitting in a realtor's office one day and telling him, yeah, we're going to buy 20 more houses this year. And he said, well, just buy a multifamily. Oh, no, I'm not ready for that. I just didn't even think that was possible. Like Monopoly, you got to own so many houses before you can buy a hotel. That was my thinking.
Yeah.
And he said, oh, yeah, you could. I go, really? And before I left his office, I made an offer on a 24 unit, and that was the 24 unit we ended up owning. So
Oh wow.
just understanding the scale of it really made a difference for us. I like the safety factor of it. I like the low interest rates. I like the in Canada, we get what's called CMHC insurance, which is kind of like your Fannie Mae, Freddie Mac programs. So longer amortizations, different stuff like that. So really be able to have your buildings cash flow. And I find that investors, because multifamily is treated like a business, they also are more comfortable in stuff like that because it is a business. It's not like, buying one house or two houses. That's not really a business. But buying a multifamily is.
Yeah, I think I love multifamilies, like what we talked about, but I think that really is also easier too for investors to digest because, for example, if we went straight storage units, not everyone's comfortable with that, understands it, how it works, and or
Mhm.
mobile home parks or senior housing, they might not fully understand the big picture. Some of them might not be their appetite. I think housing is generally most people's appetite because people need a home to live in, regardless of it being a commercial property.
Mhm. Yeah, and you know what we found too, like we've been all residential multi, but just recently I was telling you that we bought that we got about 250 units in Memphis.
Nice.
Donald Trump's group just bought $30 million worth of real estate in the same city, residential, and in the
Wow.
past they kind of stuck with hotels and retail and stuff like that. So what does that tell you? What do they think is going to happen going forward? Residential.
Yep, you're absolutely right. And then the fact is the other big players are buying there in the same area. That's good to you for you to know too, and you can figure out what they're going to do because they're probably going to change the landscape of the area anyways through commercial investments. So that would help your property gain hopefully more equity, more residual income.
Absolutely, yeah.
And I can't
We
wait to
came
hear
in
about that
after
and
we
see that
did,
happen.
but it's still good to know. It's like almost a pat in the back saying, "Oh yeah, we're doing the same thing." So
Exactly. It's a smart move because they're going to invest a lot of capital into those buildings that they bought, 30 million especially. They're going to invest a lot of capital back. So that basically improves the area really quickly.
oh, it does, yeah. And there's a huge need there too. A lot of workforce housing needed in that area. So that's the other part we really like.
Yeah, and hopefully it creates a lot of jobs over there, opportunity, and the landscape changes to just improve the community, right?
Yeah, yeah, absolutely.
Perfect. We're about to wrap up right now, but is there any final words you want to give to the audience and let them know how can they really get motivated, get moving, and change? It's already almost half the year now. Like, what did people do in the last 4 months, 5 months?
Yeah, yeah. Well, you know what? I'm a big believer. You and I talked about this. You need a coach. You need a mentor, somebody who can help you take things to the next level. And just remember that that person has to be somebody who's done what you want to do, not your uncle, broke uncle, or that sort of thing. And that's, I think, one of the biggest things people need to wrap their head around. And if you're taking advice from people who are not doing what you want to do, well, that's 100% on you.
That's true. Thank you so much, Edna, for being on our show today, and I'm so glad to have you here. How can people reach out to you?
The best way, my website, ednakeep.com. I'm on Facebook as well if they want to reach out and message me or follow me. It's Coach Edna Keep. But those are probably the two best ways to connect with me.
Great. Thank you so much. Be sure to check out Edna Keep at ednakeep.com, and we'll talk to you soon. We're going to hopefully create a big event soon and then have everyone come in and talk more and create, a lot of value to all the people who want to invest in real estate, get started in real estate, and buy and sell real estate. But thanks so much, everyone. Check out our podcast, thetruthaboutrealestate.com. The Truth About Real Estate, and at matthewma.com. And we'll see you soon on the next one. Have a good day.